surprised everyone. No one was looking for 278. I was looking for a good number and the dollar to go up, but not to that same magnitude. There was a very good trade from the significant euro-pound support level that I put out at 70.40. We got a 160 pip rally out of it, and there's going to be some re-entries here should the euro pull back. It almost went to my third drive line, but here we are. We have risk off beginning in the S&Ps. This was something I talked about, 2100, 2120. Now we should at least to the minimum correct the downside in the S&Ps. I'm forecasting this as being dollar negative. The dollar pretty much went up with the market, should correct with the market. Also, let's get to the dollar index. We're starting to achieve some long-term targets that come in around par. If you recall, I was talking about closes over 97, measuring towards 100.5. So here we are. This was this 97 resistance. It played with it a little bit, but from this crash low, call it 93 to 97, that could give us 101. So I'm not a believer that we have peaked yet. This was such a strong number that there's a lot of moves, so we could pull back in the dollar and then thrust up one more time. In fact, it could even begin after being a little lower tomorrow, still have some more upside, but just want to give you a macro feel on this, and we could do this with the monthly. Let's try 15 years. I'm going to get a little macro with you guys now, and this probably isn't even enough. Let's see if it's been trading a quarter century. I want to give you some macro perspective on this. Okay, so it doesn't show it. The high was in the 80s when we had the Plaza Accord, but we're now into some retrace moves from the last important high in the dollar up near 120, and there are a lot of people looking at 120 coming down the road. I think 102.5 will contain any advance, and I'm actually looking for a pretty good bear move. I believe the dollar will peak out. This is a little bit more macro. It's not going to tell you what to do in the next 10 minutes, but I am expecting a dollar peak to occur within the next several weeks into year end, and then a pretty good dollar break that's going to challenge a lot of the dollar bulls thesis of looking for 120 and, you know, guys looking for 87 in the euro, et cetera, et cetera. So guess the question is, do we take out these highs first, which were at a high of about par 27? That should be easy to do. Par 71. So 101.5, 102 is not a good place to be beginning to get bullish on the dollar. I think that we're setting up for a big dollar short into 2017. So let's just keep that in mind. Let's go back to the daily here. So we have an inside day, no follow through to that explosive move, but you can't fade the dollar when there's this much momentum. And something I talked about Wednesday when I said, you know, be pretty flat, the NFP is, it's not just getting to a price, it's how it gets to a price, and this was a pretty good momentum reading over 70. So we could do some work while this peak is taking place. I actually think there's still at least 106.50, 106.40 in the euro before we get a better. But what's interesting is that the euro pound did bottom last week, which is the way it's supposed to happen. Euro pound should peak before the euro peaks, and euro pound should bottom before the euro bottoms. And we're going to have a pretty good test of that coming up here in the next several days. I was right about gold. To avoid gold, we'll be short gold. Talked about that we could still see one more low 1050, 1030. That still looks to be on track. Gold really fell apart in the last couple of weeks. The point I'm making is that gold shares are not making new lows. We're only about $18 away from taking out this low, and gold shares aren't. So I'll be looking at some mining shares when we're trading 1050 to 1030. So this too tells me that there's still probably much more or some more downside in Aussie as I correlate these two together. The crude is a little bit more two-way. Which I correlate Canada with. There's your crude chart. And it actually looks vulnerable here unless we try and turn it here around the 43 level. To me, this doesn't look bullish unless we get a turn, a reversal above 43 to 42. So last Wednesday, even though we had been milking the short side of USD CAD, I said to get out of the way, leave it alone, don't be short USD CAD, and USD CAD exploded just like US dollar yen, and I said look for potential shorts at 22.5 in US dollar yen, but we need divergences to hold, and they all got blown out. So here's the crude. Last one we take a look at is Treasury yields, which have spiked up. They spiked up pretty good with the 278,000 increase on the NFP Friday, and that's what took the yen above the 22.5 level. Yen looks like it wants to pull back to 122.5, and eventually we might get some type of bottom. I thought this could be A, B, C, not saying today's the bottom, but we could be getting closer. And then maybe bonds do have another rally, and the yen pulls back. We're getting a pullback from some fib levels at 23.5, something I mentioned above it. But there's just too much momentum right now in the yen, and I'll show you when we get to the instruments what's going to be a failure of the yen. What's going to negate what happened Friday. Everyone with me on my view of the outside markets? I correlate, have to look at the Dixie, thinking the Dixie may still have some more upside, even though we're pulling back today with the S&Ps. Still think we're going to see euro under the 107 handle. I have numbers around 106.40 now. And Aussie should remain under pressure until gold bottoms. Everyone with me? Canada should remain stiff until we get this dollar peak and the crude market carves out a bottom. Everyone with me? There. So with that, let's move on to our individual instruments, starting off with Euro USD. So this line was drawn last Wednesday. I drew this 3-drive line, said that looks like we could go to 107. The low was 107.09. I'm going to stay with this line, and to me it looks like we still need another drive down here. And this line's going to come in this week right around the 106.5 range. So I expect today's weakness to be contained about at the 108 level. Above 108, abandon your shorts. So what I'd like to see is one more decline in euro back down here, maybe 100 pips or so to the downside. And with that occurring, I want to stress what we had happening last week in euro pound, because I've been talking about it for a while. This was more the impact of the dovish statement that Carney made during the BOE. And for weeks, I've been talking about on the weekly from up here when we were bearish that we could put in a right shoulder between 70.40, 70.50, and 69.80. We almost got a little bit of a reversal week. Last week was a great recovery. We're starting to grind out a potential right shoulder. So the ideal scenario would be for the euro to break to new lows down 106.40 or so, and euro pound holds 70.80. So 70.70, 70.60 could be worth a probe. Having your stops here, because if we take out this last week's lows, we're probably going towards the 70 level or lower. But I'm going to give this the benefit of the doubt that we had our first wave out of here. Here's your daily. And now we're just correcting. This was your first pullback. It was a nice pop. 70.40 to a high of 71.90. So call it 160. So 100 back from here. We already were trading near the 61.8 level right here. I already put up the fibs. We were a little in between the 50%, 61.8, but I like 78.6 and sometimes 88.5. So for right now, I'm looking for a higher low to be put in euro pound. And I like this 70.80, 77 level, 70.70 level for a probe. So we had 160 here. So if we had 1.618, that could give us a 73.20 level up here, up towards 73. So looking to buy breaks in euro pound, risking the low of the move down here at 70.40. Give me a Y if you're with me. So this makes the euro the preferred long rather than the pound, because I'm looking for this right shoulder to develop. I'm going to go with this was it right here, and we're going to do some work and build a right shoulder like we had here. Otherwise, there's one more break back down towards the 70 level. But I'm going to go with what happened last week. Perhaps there are a lot of people that were real bullish of pound, looking for hawkish statements from Carney, and Carney threw a monkey wrench into that, and perhaps this move in euro pound is going to be more about pound weakness and euro strength. But the forecast was right for over 400 pips from up here, and now I think we have to start looking at the other side of the equation in euro pound. So thinking there could be, after maybe a little more strength here in the euro, one more decline, take us down to the 106.50 level. You have to get out of the way if we start closing back over 108.04, because then we could just start moving up in 100-point handles. My preferred scenario is one more low in the euro down towards this 106.5 level. Give me a Y if you're with me. So the pound now becomes the preferred short. For times you think the dollar is going to strengthen, we have a nice inside day at major support. I'm going to stay more focused on the euro. I think the pound should have some trouble on any recoveries back towards 152. A lot of people have been talking 49 for a while, so we have an inside day at major support. But rather than looking at this being a major low, because I think euro pound is bottoming, my preferred long is going to be buying weakness in euro rather than buying weakness in the pound. And for days that I think that the dollar is going to recover, I'm going to be looking to self-strengthen the pound. Give me a Y if you're with me. And I can ignore them all and just trade the pattern in euro pound, which I have the most conviction of, because we've already, it was a forecast down here. So when I was talking about lows at 70.40, there was a low 41. I said as deep as 70 for if we had symmetry for a left shoulder. But see, we've already got evidence here because we had to move off that support level. So go with what's already proving itself and buy the break here towards 70, 78 or so. That'd be my preferred between the three. But then if I want to hear the ice crack, because I'm constructive on euro pound, I'll be selling rallies in the pound and buying dips in euro USD, most likely around the 106.40 level, 106.5. Everyone with me? So here's a live classic example of it's not just about price, it's about relative strength. And all this time I was saying I think the end's going to above 122. It's going to shake out the bears. And I was looking for 122.5. So right after the NFP was released at 278, in a heartbeat, we were through this line. There was no divergence. So it's not a trade you take. You have to see it come off, be rejected, where the RSI reading, but you didn't really, there was no two ways to think about it because we were up here in 30 seconds on that strong number. So it blew out the divergence. So we had confirmed highs. We're beginning to diverge and we pulled back. To me, to negate this bullish move in US dollar yen, we needed to get back within this channel at 122.5. I expect if we pull back to 2.5, there'll be natural buyers there. Or we have to wait for US dollar yen, and maybe that happens after this pullback, to rally and give us one more high with the RS staying under 70, which is a likelihood. If we pull back to this level here, 2260, and then we get a marginal new high, at least we'll have a market that's not confirming new highs. It is here, you know, you kind of have a little 1, 2, 3, but even this divergence is a little bit too much for me. So if I have to wait and be late under 2.5 when it negates this signal, that's fine. If we get a pullback and then marginal new highs and we begin to diverge, then there could be potential selling opportunities, maybe up around 123.70, 23.80. Give me a Y if you're with me. So the other good trade mentioned on Wednesday before the NFP was the guppy. I showed the 50% retrace level on the guppy right here. This was before it. Here I said look for a 3 driver here and did the fibs on it. If you took that, it was a great trade. I still think this is going to fail. So we're getting a little pullback here. We might make one more run with the yen and maybe the pound stabilizing for a day or two, but I'd look for sales up here in the guppy because I still believe on the daily that this time we could break down in the guppy, head back down towards 180. You want to get real macro, you look at this is a pretty important trend line, neckline, that we could fall all the way down towards this 170 level, 171. So looking to establish short positions in the guppy. Last week, if you took it and held it into the NFP, you did pretty good because we had an initial 300 pip decline off that, although this was in a heartbeat. But here was your classic divergence. So I'm leaning towards selling rallies here in Euro Pound. We hold this 5.5 level, head up towards 87-ish. I'm going to be interested in trying short in the guppy. Give me a Y if you're with me. And this also ties into, because of my posture on Euro Pound, that the guppy is now going to become the preferred short over the Euro Yen. So Euro Yen still lower, right? And it looks like it has a little double bottom. But I don't want to short the Euro Yen. In fact, there might even be some type of counter trend buy in the Euro Yen after this decline. Although there are a couple of other Euro pairings that look a little bit more positive for a pop. Last week I was negative Euro Aussie, set to get flat into the NFP. So, you know, this was the NFP. We've had 2 drives down here. In Euro Pound, maybe we get another shot down with the Euro to 50.71, but if you look on the daily chart and it's starting to look okay, you know, we could get rallies back to 4.5, 5.5, and also the Euro CAD has a similar setup in here. Euro Aussie looks a bit stronger to me. But we have a similar setup happening here in EuroCAD, where we could get a rally back to old resistance up towards this 145 level. So looking for counter trend trades, not home run balls, but in the next couple of days, recovery in the Euro Aussie by weakness, EuroCAD by weakness. Look for 200 pips or more. So give me a Y if you're with me on the couple of the Euro pairs that I'm looking for bounces that have a little better look than the Euro Yen. Aussie Yen, I've been trying to be patient with Aussie Yen for quite some time, thinking that we were going to head up towards the 89.20 level. The action's still heavy, especially with what's happening in gold. So to me, it's still a neutral. Probably lean on it being more of a buy, but I'll just stand aside on this Aussie Yen. If your proclivity is to still be looking for 89.20, you could probe it at 86 with stops under these lows, because we did get a decent divergence at the bottom down here. So this looks like we're moving sideways, and there could be another push to the upside, and perhaps we are. Eventually, if you have the patience of a saint, head up towards 89.20. Give me a Y if you're with me. Well, those are all the yen crosses there. And again, we're going to be watching this 122.5 level, or after a pullback that may have ended here, work even maybe another 30-40 lower, a new high in the yen that diverges. So here's Canada. You know, we did pretty well in Canada. You know, we were there for this. We were there for this pop and then this pullback. And then I said, once we got over 120, leave it alone. So Canada looks okay. And I can't fade its strength here. We're diverging a little bit. But this high is still confirmed, so I still think there's some more upside in USD, at least to 33.60, 134, and I'll see what things look like up here. 35. And what bothered me, even though it was a successful trade in the Canadian, is we did have a confirmed high here on the 1 and 4 hour, and came close, 75.50, 75.58. So we do have a little minor divergence here, but well over my ideal readings. I need Canada, before I get short, to pull back and do some work and then have a new high with the RSI under my 70 level. So neutral stance for now. Think that we have 33.80 to 134 coming in USD CAD, which probably projects lower numbers still for the Aussie. Aussie's done nothing right, trying to diverge, but really hasn't. This was pretty impulsive here, so we could rally back to 71 and still go to 69.5. So I think we're going to test these lows in the Aussie. What kind of low is this on the daily in the Aussie? Besides a 22 reading. Yes, it is a confirmed low. So perhaps with gold washing towards 1050, 1030, we get this washout in the Aussie as well. We'll see what the RSI ends up like on the daily if we wash out to new lows. We're really not that far away. 69.07, about 150 pips away. But to me, it looks like that's what's going to happen. Everyone with me on the commodity currencies? Any questions on it? Also, there's one trade that looked interesting to me today. There was some real nice divergence here on the CAD yen. Four-hour time frame. We have two drives here. Maybe we get one more. But there could be a nice short setting up here in CAD yen. Here's drive 1, here's drive 2. Perhaps one more. It also is a nice little retrace move off this big break. So CAD yen potential shorting opportunity. At one point we were down here at 87. So perhaps this is running out of juice here. Way under old support, new resistance. Be alert for reversals and potential downside action in CAD yen in the days ahead. There's a little bonus pair that I don't always talk about, but looks okay to me. So overall, we had divergences blown out on an exceptionally strong NFP that no one guessed. And we had confirmed lows in euro. So we need another one that does not confirm. US dollar yen blew out to the upside and confirmed the high, beginning to diverge, but still a little bit too much mo. So we're going to see what happens after this pullback. We're going to be paying attention to this area in the euro around 106.5. We're looking for reasons to short the guppy, maybe up around the 187 level, and we're going to stay on top of this euro pound trade, thinking that there is potential for the euro to make a new low, with the euro pound possibly putting in a higher low around 70.80, 70.70, and you're going to want to protect yourself under 70.40. Or you just scale in from 70.80, you put a small piece on, and then if it gets down to these lows, the 70 level, we'll have some nice divergence down there again if it got down to 70 for another buy and risk 100 pips for a position trade. So you could scale it, or you could get in, get out of the way if it doesn't work right away, but it's my contention that we're in the beginning stages of developing a right shoulder in euro pound that eventually is going to take us back to the neckline at 74.20, and then the measured move out of this formation coincidentally comes in right around the 80 level on the 200-week moving average. Any questions on any of the pairs that I've covered today? Any of the outside markets? Okay, well, I'll be back with everyone on Wednesday. Thank you for your attention, and keep in mind that we are in beginning a topping phase, which kind of makes sense with euro pound possibly bottoming here. Long term, we're near some objectives, 101-ish in Dixie. So although the dollar could still benefit for a few more weeks or a month or so into year end, that the big money next year, my belief, is going to be made on the short side of the dollar. And with that, don't risk, don't try and hit home runs, hit singles and doubles, so that you're around for this massive and historical turn in the dollar as it unfolds. Thank you, everyone, for your attention. Good hunting. I'll be back with you on Wednesday. Thank you, RoboForex.